Back to my channel. Today I'm going to be talking about range concept. Talking about range concept or range trading. So this range concept helps me when I get direction for my higher time frame. I'll be able to use the range concept to follow up this, to keep following up the higher time frame bias step by step, and also knowing when to temporarily leave a particular setup. Sorry. Also knowing when to temporarily leave a particular setup and focus on a new entry without considering that entry. So the first thing I do when I want to use the range, the first thing I need to do is determine my direction. The first step is direction. So direction is the first step I need to clear out of my list. So for GBPUSD, we know that GBPUSD is reacting from another block in the 3 months time frame. Let me spot it out. I don't need to mark this out. GBPUSD is bearish, creating GBPUSD is bearish, and now that's meet that same high again. Okay, this higher highs and higher lows. We're expecting it's because of what historical data. We're expecting another push to the downside if possible. Okay, GBPUSD could this possibly break to the upside this time, but at least there will be a reaction from this other block. There will be a reaction, and we are depending on that reaction. This reaction now, if it's just 2 candles, that's 6 months. That's a lot of trading time. A very lot of trading time. Let me go to my 1 month time frame. I've established the facts. Established that. I don't. Let me just go down to my 1 day time frame to spot out what I saw in the market. So, although price broke higher low and is now probably pushing to the downside, if you look at this, spot this QMR setup right here. You have a sweep. Let me do it fast. You have a sweep, a break of structure to the downside. We have another break of structure here. Then we have the first pullback. This is the structural liquidity for those who are familiar with QMRs. If you want to learn more of QMRs, and probably don't have money for any kind of paid classes, go to DAX. DAX, the brand, it teaches QMR to the fullest extent. So that if you want to learn QMR, it's a very good reversal pattern in the market. So we have this, and what again? We then need marking out this break of structure. Now I have the structural liquidity. The next, the next thing I have my other block that I'm sure is the other block. We could cover this or just focus on this. This is the other block, and the QMR will act like a magnet in the market. Like once you have a point of interest, valid point of interest, 60% of the time the price is drawn towards that your point of interest. Price could change direction to be bearish just to tap into a bullish POI, or change to bullish to tap into a bearish POI. So the closest POI for this reversal to tap into this POI right here, it's here. There's another QMR right here. You might not see it from the 1 day time frame, but let me move down to the 4 hours time frame. So I'm still on direction. Being the first thing I look out for before I apply my range. I'm still on direction. I know some people talk about that because of how a 1 month time we can have a different direction, this one different direction, this one different direction. They don't really know how to apply their strategy in the day trades we take. 1 hour, 3 hours, 2 hours, 30 minutes. Don't really know how to do it. Hope this video helps anyone that is in that position. So just look at this same stuff. Sweep. I don't need to mark out this stuff. Sweep, break of structure, break of structure, structural liquidity is a valid POI for buys. Now market mitigated this POI. We don't enter aggressively. We won't enter aggressively because of market have been selling, creating lower highs and lower lows. So we won't enter aggressively into this market. Next thing I wait for is my reaction. I saw that market have started pushing to the upside. I'll be waiting for it in my 1 day time, in my 1 hour time frame. Sorry. So we have targets. This is our first target. Or if you don't want to target the structural liquidity as your first target, you could still. This is the valid sell swing structure. So from here to here, it might be retracement. We don't expect price to have a smooth ride. So that might pullbacks before price takes out the structural liquidity to tap to this POI. So when you're in this zone, just know that there might be few retracement, and you should not consider those retracement like a turning point in price or something like that. That's the stuff. Okay, right there now, I've finished the second part of this, the second part of my checklist for using the range. I've got to my direction, and now I've spot a possible reaction for 4 hours, and now price is reacting for the 4 hours entry. After getting my direction, the next thing I'm going to do is, okay, we already have our POI in 4 hours and we have mitigation. Let's assume that I don't have premium. If not, I'd have cut the rest of this out, but I don't have premium. So let's focus and act like this is the only reaction. This is the only reaction we have. What are we going to do next? Patiently waited. I patiently waited for price. Patiently waited for price to come at me to get the POI, and I will next thing I'm waiting for is for price to give me a shift in structure for me to confirm the bullish intent. What do we have? I don't know if this is news, but we had a shift in structure right here. Market structure shift. We had the market structure shift right here, and that's a very good sign. When we have market structure shifts, when we have a shift in structure, next thing we're expecting is our first pullback. Right. The next thing we'll be waiting for is our first pullback, then break of structure and mitigation of our POI, the POI closest to liquidity. That's the next thing we're waiting for. So in this case, we can see the first pullback. We can see the what we consider as our inducement to be this. What we consider as our inducement to be this, and the closest point of interest to our liquidity is this POI, this breaker block. The breaker block is the closest. I don't know if there's any. Some people might get confused about this. Why not pick the other block? That's why we have the rule of closest point of interest, closest POI, the POI closest to liquidity. We have is it 4 rules of the picking a point of interest, and I think number 4 is POI closest to liquidity. So this is my point of interest closest to liquidity, and we'll be waiting. We'll probably be waiting, and this is the key high, like the high that must be broken for price to continue moving to the upside. So while I'm waiting for price to come and mitigate my come and take out my inducement and mitigate my POI, I'm also waiting for price to break structure to the upside. Okay, what do we have here? You can see that price have broken structure to the upside, and this is where range comes in. It's very important to understand the range so that you will know when to leave a particular POI. It's not as if you're leaving it like it's not going to play out again. There is sometimes you need to take extra risks in the market in order not to miss out in a move. That's when we use the range. That's exactly when you need to use the range. So the first thing The first thing I would do when I saw this and I saw my inducement, the first thing I would do is take my fib from the low to the high. This is a buy swing structure from the low to the high. The first thing I can observe, if you look at this Fibonacci, the first thing you can observe is that the inducement tapped into the 50%, and that we have the Fibonacci rule that says buy at discount, sell at premium. This is the key fundamentals we're going to be using to do anything concerning the range. Buy at discount, sell at premium, just basic knowledge. That's what we're going to be doing. So first of all, you can see that price has mitigated the discount zone and created inducement. This makes the inducement valid. Of course, it makes the inducement valid, and for extra confirmation, we can see that the inducement did not tap into our point of interest. So our point of interest is still valid. Now, what we call this range is the structural range. This is the structural range. After the break of structure to the upside, we have what I call the new range or recent range. Now, if a point of interest in your new range, if the point of interest in your new range fails, the structural range will still hold, or like say might still hold. So everything is uncertainty. What I'm saying that if your new range, a POI in your new range fails, your structural range POI is still valid. When your structural range POI fails, that's when we can now start expecting a change in trend, a change in trend or change in structure. But you can never get that change in structure by a new range POI failing. So when price takes out this high, you can see that we have a new range. And there's another thing you need to understand that in this new range, you will not actually get a new range if before breaking structure, price didn't mitigate the discount zone, or didn't mitigate just let me just say, you won't get a valid new range if it doesn't at least mitigate the 50%, at least comes down to the 50% of the Fibonacci. So this is my Fibonacci setting in case anybody wants to, can screenshot it and set it. It's just 0.5, 1 and 0. So if price doesn't come and mitigate the 50%, you cannot get a valid new range, because if it doesn't mitigate the 50% and you're trying to get a new range, price could just come, take out whatever POI and tap into the 50%, give another setup before pushing to the upside. That's why you always want price to come into the 50% before you mark out the new range. You need price to come to the 50% one. Price needs to come to the 50% one, and price needs to break structure to the key high, not just internal structures like this. No, the key high that price needed to break for price to continue being in an uptrend. When you break that structure, that's when you can now mark out your new range. So I mark out my new range, and you can see before creating the new range, what are you seeing here? You can see that price also still mitigated inside the 50%. Price equals the 50%. So that is check, that we have checked that part out as we are waiting for a new setup, waiting for a new entry in the market. In these situations, for example, I think we are looking at this. We are looking at this from what time frame? Looking at this from 1 hour time frame. So you can scale down to your. Let me mark this. Let me mark this out. Okay. Let me mark this out. We'll go to our lower time frame and spot entries in this new range. Remember, normally this should be the next POI. After this POI, this should be the next POI. This should be the next POI. This should be the new higher low. So this low is not the low that are not supposed to be broken. So this should be the inducement, and this should be the point of interest. Now that's it. That's where we're supposed to take. But because of this new range, and price has already mitigated the 50%. If we see a POI above this POI right here, we have to take that POI. Until that POI fails, we are not going to consider this. We'll not consider this entry down here. So let's walk down to our 30 minutes. And you need to be familiar with the higher time frame, as people will say. Get familiar with the higher time frame, so and not only higher time frame, move between time frames to look to check out and look for what you're seeing. And this new range, this range concept is best to do it on a higher time frame. Swing structures, not just moves in 30 minutes. Swing structures, valid higher highs and higher lows. That's where you use your range concept, not just anywhere. What are we looking for in this lower time frame? What we're looking for is basically what we always look for in the market. We're just looking for um point of interest, liquidity, and POI. So you can see this. This is a break of structure, BOS, and this break of structure. This is the other block. This is the other block. This is the other block. Probably move it to the downside. This is the other block. This is the break of structure. This is the first pullback. Here, what we have here is not a point of interest. So let us consider this as internal inducement. Internal inducement. In stuff like this, I prefer like putting my entry in the start of the end of the inducement there, the internal inducement. I put my entry there. And what are we waiting for? Waiting for price to come and tap into this POI. Look at what we have here. Tap into the POI. If you are defining it here, we still get tagged into the trade. This is instead of waiting for this point of interest down here. And don't forget that if this fails, this is still valid. If this fails, this is still valid. And we not just when you're picking this type of the point of interest from the new range, you don't just pick what this don't just pick any type of setup you see. Like for example, now in this inducement, then come down, now pick it. Allow price to play out very well. Breaks the inducement should break structure. Everything you look for in an A plus setup. Just look for an A plus setup or equal highs. The liquidity should give equal highs, at least 50%. In fact, more than 50% before you consider the setup. But you just also always bear in mind that when it fails, the structural range setups are still valid. That's what you need to consider. That is just it. I've been trying out to like make this video, and I'm trying to make this video, and I don't know how to. I was going to explain it better, but I hope everybody understand this stuff. So what we have here: point of interest, TP. Of course, TP are the next key high or higher high that price should break. So when you're looking for the entry is not just specifically for 30 minutes or specifically for 15 minutes. Go just move around the time frames. Let me show an example. Going to my 1 hour time frame, back to 1 hour time frame. You can see this is the setup that we got. Looking at 30 minutes time frame, this is the setup we got. And now on 1 hour time frame, what have we seen again? We are seeing break of structure. I seen a break of structure, a pullback. I seen a pullback and point of interest. This is it. We are seeing break of structure and we are seeing a point of interest right here. On my prop, this stuff would have triggered. On my prop, this stuff would have triggered. I don't know, maybe if it's live accounts with spread and everything, maybe it will not trigger. But this is another point of interest. Without missing any move in the market, so most times the market will not just come down to start giving all this stuff. If you wanted to have covered the low of the block, and that's still valid. That's it. Very simple. Very simple. What again? What again? Price have broken this high here. Price have broken this high. So we have a new swing structure. This I, I was considering this to be my higher high, but this is not valid. This is not my higher high, because for the higher high to be confirmed, it should break. The higher high needs to break to take out. It needs to take out internal structure. Internal structure. It needs to take out internal structure. It needs to take out internal structure. So if I go to my 30 minutes, I'll mark out where I was expecting price to take out for me to consider consider that stuff. I was expecting price to take out this. I was expecting price to do. You can consider this your stuff, but this one didn't break structure, so I won't consider it my internal structure. So if I had seen this early this break, then the closest point of interest would have been, if this is the high. I don't think this one mitigated the 50%. If it mitigated the 50%, then there's nothing wrong with the POI being here. Nothing wrong with the other entry being here, and why the main entry would be right here. Remember that both of them mitigated the 50%. Now this is where the take your point of interest that is closest to liquidity comes in. But even if price took out this would have still been valid. Both of them mitigated the discount level. That's what you need to understand. Both of them are valid point of interest. Both of them mitigated the discount level. That is very, very, very important that is very, very important note. They both mitigated the discount level. Let me go to my 1 hour and show it. Look at it. This point of interest, it mitigated the discount level. Same thing with this one is even inside the discount level. For it to be valid, price must have mitigated the discount level. If price has also come in and probably mitigated the PI and held, or to take it out, mitigated this one and started giving re-entry, I would take my re-entry and continue to buy to the upside. That's it with just range trading. That's just it. Just knowing the right place to buy and sell. You sell at the discount. You sell at the premium and buy at the discount. That's just what range trading is all about. To like avoid early buys or early sells in the market. For example, if I saw a setup in this area, I think it's held a setup here in this area, I won't take it. As long as price have not yet previously mitigated my discount zone of tap into 50%. Any buy setup I see above here, I'm not interested in it. That just is. Please, if you're not subscribed, please subscribe and please like this video to get more views and attention. Please, thank you very, very much. If you want to join the community, my community, you just click the link in the bio and join my community. You join discussion group and you can get to talk to other traders like you, ask them how and what they are doing works for them and everything. And also, if you want to get like your mentors directional buyers, it's only Lingard for now. Lingard directional buyers. If you want to get weekly directional buyers, just join the membership in the bio. Join the not bio, close to the subscribe button. Smash and join the membership, or you DM me on WhatsApp, or just preferably just do it on WhatsApp, or do it on YouTube. Join the membership to get access to the videos, as I'll be posting them probably 2 or 3 times in a week. See you on the next video.